Folks, be careful about the real estate agent who gets caught up in the hype. I'll explain what I mean and then get into the latest home prices and insights for the Peel and Durham region for week ending May 31st, 2023. So we recently listed and sold the property, and after the sale, after the agreement was all signed and accepted and it's a firm deal, the sellers told me that they had interviewed another agent. I didn't know this at the time, but they said they interviewed another agent, and they chose me because of the way I picked the price of probably what their home should sell for. I say probably, I kind of estimate. It's not an exact science, you can't pick the dollar, but I, with accuracy, estimated what their home would most likely sell for. And they believed it, and they said it was because of my analysis and how I looked at the market in the neighborhood. The other agent showed up with an iPad and was flipping through articles, was flipping through media articles, and was reading headlines about how they said that Canadians are over leveraged. They talked about buyers because of the higher interest rates, their affordability. It was talking about the economy, the recession, rates are going up, we're going to have a market crash. Was just flipping through what they described like dozens of articles of how bad things were. And then when it came to picking the price, the other agent basically had the attitude that because of the way the market is right now, the economy, we need to be priced a little bit lower than their recent sales. And I went the other way. I said, well, prices are trending up, we need to be a little bit higher. Now, everything that this other agent was showing could be true, but I don't see what that had to do with pricing a property right now. And this is why I'm saying be careful about the agent who gets caught up in the media hype that's out there. Because, I mean, we hear it too. I mean, I'll turn on the TV and there's going to be tons and tons of talk about the economy, the world economy, how it's affecting Canada. Canada is the most over-leveraged country in the world, and it goes on and on and on. And all that may be true. But what does that have to do with if you made a decision to sell today and you're going on the market today? What does all that have to do with how do we price your home now? Be careful about the agent that's caught up in the hype, because it might not, probably not, that's not going to be relevant to pricing your home now. Now in this scenario, I happen to have a price a little bit higher than the other agent did, but in the next situation, the next listing appointment, maybe I'm a little bit lower. It depends on what's happening right now in that neighborhood. This is about selling a property. If you're buying a property, the same thing applies. You know, we see it on our listings when agents put an offer on our properties. We'll get 3, 4, 5 offers on a property. The majority of them will be within a certain price range, and then bang, one shows up over here. And that's because they're caught up in the hype of multiple offers. We have to outbid everybody. And the media only announces property selling $400,000, $500,000. Oh, this property sold $600,000 over asking. The media doesn't really talk about property selling $20,000 over asking, $50,000 over asking. Those are not sexy numbers. The media will not say, properties are selling at market value even though they're selling over asking. It doesn't talk about that. It sensationalized the $600,000, $700,000 over asking. And realtors get caught up in that, so they find themselves competing, and the advice they give their buyer client is, we need to be here, when maybe you could have bought it a bit lower. So on either side, whether you're looking to sell or you're looking to buy, be careful that your realtor is caught up in the hype the way you are, because that's not the realtor's job. The realtor should know, it should separate themselves from the hype that's out there and understand what's really, really going on in the market. If you think this video can help somebody you know, please pass it along. If you get value from what we're talking about here, subscribe. If you want to speak with me about your real estate situation, selling, buying, it's really simple. Below this video in the description is a link to my calendar. Book a time that's convenient for you, and we'll talk about whatever's on your mind. Let's get into the numbers. There's a market trend happening right now that could have a negative effect on home prices. Nobody's really talking about it. It's kind of happening behind the scenes. When I get to the numbers, I'll bring it up and I'll talk about it then. Let's get started. So this is for detached properties only. And we've got the red down here, that's Durham region. The green is Brampton and Mississauga. A quick summary. Look, Durham and Brampton, prices seem to be going up. And again, this is just for detached properties. Prices seem to be trending up. Mississauga, little bit of a nosedive here. Let's get into it. We're going to start off with Mississauga. 71 detached properties were sold for week ending May 31st. It's up quite a bit from the previous week where only 58 were sold, but keep in mind, the previous week, we did have a long weekend in there, and so we often see long weekends, holiday weekends, sales normally do take a bit of a dip. But anyway, 71 were sold. 7 of those were at $2 million or more. Average sold price is continuing to drop. It's now sitting at $1,508,000. There's so many different ways you could look at the $1,508,000. If we compare it to the peak, which was January a year ago, we're 23% lower than peak pricing, and 23% equates to $461,000 lower than where we were January last year, peak pricing. If we compare it to the lowest that we've recently had, which was October, $1,391,000 in the month of October over here, well, we're currently 8% higher than where we were at our low point of October, and 8% higher equates to $117,000. If we compare it to exactly a year ago, well, a rounded number, we're $2,000 approximately higher than we were last year at this time. Percentage-wise, rounded, it's basically 0. We're 0%. We're basically where we were exactly a year ago when it comes to average sold price. The median price is 2% lower than where we were a year ago at this time. And we've seen prices for a while now, both median and average price increasing, and it's over the last 3, 4, 5 weeks that we're seeing kind of it turning around, and that's where we see the big dip that we're seeing right now. 71 were sold. 59% of those sold at list price or more, and that percentage also has been increasing, and now we see it turn down a little bit. This is for Mississauga only. Listings are way up. Here's the data point that very few people even pay attention to, but is so important in understanding maybe where we headed. So it's active listings. Active listings means at the end of the term that we're talking about, in this case I'm breaking these numbers down by week. So at the end of, at midnight of May 31st, how many properties are available for sale? And over the last several weeks, we can see, so over the last month and a half, active listings is increasing. There are more and more properties available for sale at the end of each of these periods. What it means, more properties available for sale, more choices. More choices means prices tend to come down a little bit. And we're going to see this in some of the other areas also when I get to active listings. Now, it's often not an immediate effect. It can sometimes play itself out. If sales are increasing, you won't really get the full effect of so much more choices because more people are buying up and there's not going to be a lot of properties available. But as this number gets higher, And as we head into the summer months where things come down a little bit, sales normally tend to come down a bit, we could see a ton more choices and a ton more choices out there, more properties available for sale, fewer people buying could really have a negative effect on prices, really bring down prices. So that's something to really watch out for if you're really studying the market. Months of inventory, still low, sitting out 1 month in inventory. Average days on market is 9. It's not like things are terrible in Mississauga. Average prices are trending down, but generally speaking, 1 month of inventory, 9 days is the average days on market. It's pretty active in Mississauga. Here's Brampton. 77 detached properties were sold. It's been pretty similar sales over the last 4 weeks every week. 3 of those were at $2 million or more. Average sold price continues to climb. We're at $1,342,000. 1,342 is 19% lower than the peak pricing. 19% is $312,000 lower than where we were at the high point. The low point was October. We are currently 15% higher than the October average sold price of $1,163. 15% is $179,000 higher. Compared to last year, $1,342,000 is 6% higher than where we were a year ago. Median price is 14% higher than where we were a year ago. Average sold price, comparing week after week after week, and I'm using the dotted line here, which is a 4-week moving average. Look, it's pretty clear. Average sold prices trending up. You could even maybe say aggressively in Brampton for detached properties. Of the 77 that sold, 58% sold at list price or more. 195 were listed, which is one of the higher weeks that we've had in a long time of listing of detached properties. But look at active listings. It was getting lower and lower and lower, and about 4 or 5 weeks ago, look at how many more listings are available for sale at the end of the period. So a lot more choice out there right now in Brampton, and active listings is climbing quite a bit. Months of inventory was coming down, and now it's starting to increase. We're sitting now at 1.2 months of inventory for Brampton for detached properties. Here's the Durham region. Now for Durham, I'm using Pickering, Ajax, and Whitby as my Durham sample. 75 detached properties were sold, one of the better weeks that we've had in a long time. 75 were sold, 3 of those were at $2 million or more. Week over week, average sold price came down, now sitting at $1,246,000. You want to compare it to the peak, we're 18% lower or $271,000 lower than where we were at peak pricing. You want to compare it to our low. Our low was November. We're currently 14% higher or $156,000 higher than our low point of November. Compared to last year, $1,246,000 is 12% higher than last year's average sold price. The median price is 13% higher than where we were a year ago, and both median and average prices, they're trending upwards, not aggressively, but they're trending upwards. And of the 75 that sold, 87% sold at list price or more. So if you call me and say, Santo, I want to buy a detached property in Pickering, Ajax, or Whitby, I'm going to tell you, I'm going to prepare you, most likely you're competing. Most likely you're in a multiple offer scenario. Most likely you got to be prepared. 87% is going to feel like every property is selling in multiple offers. 129 were listed, but let's look at active listings. Similar to Brampton, it's starting to increase aggressively. It's increasing also in Mississauga, but not so aggressively. But active listings, we're starting to see more and more properties available for sale. Again, that's something to really watch out for, because that's really going to play into where prices are going. If that continues, and the added effect of maybe sales slowing down could really have an effect on prices. But look at months of inventory. For Pickering, Ajax, Whitby, you're sitting at 0.6 months of inventory, a little over 2 weeks. If no more buyers come onto the market, no more listings come on, and we buy at the current rate, we'll be sold out of every property in 2 weeks. That's fast. That's why the average days on market is only 7. Here's condos. This is for Peel region, all of Peel region. 51 condos. These are condo apartments. 51 were sold for week ending May 31st. None of those were at $1 million or more. Average sold price came down to $610,000. $610,000 is 8% lower than where we were a year ago with average sold price. Median price is 5% lower than where we were a year ago. If we kind of try to focus on the dotted line, the 4-week moving average, kind of seems that over the last few weeks, either prices are trending down a little bit or kind of steady. Not a lot of movement when it comes to Peel condos. Of the 51 that sold, just under half, 47% sold at list price or more. It's a whole different world between detached and the condo market. It's a whole different buying experience. 116 were listed, and months of inventory sitting at 1.5 months of inventory. Here's a quick summary. In most cases, except for Brampton where months of inventory went up, in most cases months of inventory creep down, which kind of shows that the market got a little bit tighter. But we're looking at other data points also, and we're seeing active listings increase. There's a lot out there to digest when it comes to pricing and what's happening in the market. But don't get caught up in the hype. That's so important. I talked about it at the beginning of this video. A lot is going on. Who you hire matters. Thanks for watching. Have a great day.